everyone. Brad Rourke here, Williams Group. I'm a CPA and an accredited business evaluator also, and I've been with the Williams Group for just over 20 years now. So I have a fair bit of experience in your profession working in accounting and tax. So just a few things that a prospective buyer might be looking for if you're interested in selling your practice at some point in the near future, or quite frankly, at any point. So I'll touch on a few accounting, bookkeeping matters, and then a couple tax matters. So the first thing on accounting and bookkeeping is to keep everything up to date. Keep your books up to date. And that means having, like, let's just say, for example, we're in July now, so you want to have your July financial statements done, the bookkeeping done sometime in August. So you're not looking back a few months or trying to catch up with your bookkeeping, because if you got a prospective buyer, they're going to want to see your financial statements, not only in your most recent ones. So if you can only deliver financial statements from 6 months ago, that's a problem, because typically your buyers are looking for 12 months trailing. So what are your last 12 months? So if you don't have your books done in the last few months, then that's going to delay the process, and the buyer might be looking elsewhere. With your financial statements themselves, a couple points that you should consider is, I would say, to number one is make sure that your position costs, both you, the owner position, and associate positions, keep those costs separate, because that's important to keep those out and not commingle them with staff expenses. Otherwise, there'll be time to delineate those out or tease those out. Similarly with discretionary expenses, say travel expenses or CE expenses or meals and entertainment. Those are all buried, for example, in office expenses. It's going to do one of two things. Either it's going to lower your cash or the net income, which is going to lower the price, or two, it's going to take a lot more time with your due diligence teasing those out in order to give those augmented numbers to the buyer. So that's the second thing. And third, I would say, is to make sure that your financial statements are structured in a way that you can, over the coming years, you can look at and identify areas of your practice that might need help. So the primary major sections are cost of goods sold, overhead, staff expenses, marketing, and occupancy costs. So those, keeping your financial statement structured so you can see how your clinic is doing in those areas and see if your benchmarks are good, so that you can make decisions. So on the tax side, again, if your books aren't done or up to date, then you got to get your books up to date to file the tax returns. And part of the due diligence of any buyer is going to want to see your tax returns. So if your books aren't done, then your tax returns aren't going to be done, and then that's going to delay the process also. So just keeping things up to date is very important. And ideally, as a seller, you want to sell the stock. It doesn't happen too often. Mostly the sales occur or asset sales, but you as a seller, ideally, you want to you'd prefer to sell your stock. So typically, then you'll need to have your tax returns up to date, not just your income tax return, but so your income tax return, your sales and use tax returns, your personal property tax returns. Those are all returns that presents that if they have not been filed, there's some risk to the buyer if they're going to buy the stock, because now they have to pick up all those things and start doing them. And secondly, I would say that if you're going to do a stock sale, then the buyer now controls the company, and you don't have any opportunity at that point to amend prior year returns. So I would have potentially have your tax returns reviewed to make sure that you're not missing out on any deductions. For example, the qualified business income deduction at 20%, which requires splitting out your optical from your professional, those sorts of things. So lots of things to consider. There's many more things, but I'll just throw at those as a few things to consider with respect to your accounting, bookkeeping, and tax. Thanks for your time, and I appreciate it.